Alright guys, in this video, I'm going to show you where millionaires, billionaires, and the banks put their money. So this is you every Friday when you get your check. You get paid on Friday, you put your money into the bank. But little do you know that there's this thing called fractional reserve banking, where the bank only has to keep 10% of the money that you put in there in the bank. What they do with that other 90% is they go put it into life insurance. And you're probably thinking to yourself, what? Life insurance? Why would the banks put their money into life insurance? Well, they do this for one reason. And it's because, actually for multiple reasons, but they do this because they get an average of 10% interest on the money, and they can pull the money out and use it in other places. The way that we get marketed life insurance is just for the death benefit portion. When you die, your kids get cut a check. That's what everyone thinks of when they think of life insurance. But there's a lot more you can do with life insurance, and there's the life benefit also. And the banks leverage life insurance. Millionaires leverage life insurance. Billionaires leverage life insurance. So you should also leverage life insurance as well. And if you don't believe me, Google it. It's called BOLI, Bank-Owned Life Insurance. They use it for this reason. Again, because they collect interest on your money, right? That 90%, they only keep 10% in the bank. They go put the other 90% in life insurance. Then, because they're able to pull the money out of the life insurance policy, they go make even more money on it by lending your money out for people so they can buy homes, cars. They lend the money out for credit cards, business loans, college loans, and personal loans. And they make a spread. They make all of this money off of your money, all while paying you 0.01% interest. They pay you less than 1% interest, and they just made all of this money off of you. That is just not the way that you should do it. What I'm teaching you guys in this video is to be your own bank. It's called infinite banking. Cut the middleman out, cut the banks out, be your own bank, and it's nothing more than an IUL. It's a specifically structured life insurance policy for the cash value accumulation, right? It's literally structured to print money. It's a machine that works for you 24/7 for the rest of your life until you die. It's permanent life insurance. It's not term. It's permanent. It sticks with you for the rest of your life. You will have this forever. This machine, this vehicle that you put your money into will work for you for the rest of your life. And I'll show you how. So, on average, because IULs have a floor rate, specifically with me and the carriers that I work with, I have a floor rate of 0.75%, which means that the minimum interest that you can make on an IUL through me is 8.03%. So just for math's sake, I'm just gonna say the minimum interest that you can get on an IUL through me is 8%, right? And on average, and this has been consistent for 31 years, IULs have produced 10% interest on average, right? And so if you guys are familiar with the rule of 72, I made a video about that. If you don't know what it is, pause this video, go check out the rule of 72, because this part's not gonna make sense to you. Albert Einstein invented this. You take 72 and you divide that by your interest rate. In this case, we're saying 10%, equals 7.2. Why? That is 7 years and 2 months, right? So what this equation does is it based on your interest rate, it'll tell you how long it's gonna take for your money to double, right? So let's just say you threw $10,000 in an IUL, didn't touch it, just let it sit there, and you came back to it in 7.2 years, you'd have $20,000 sitting in there. That's not really how you throw money into an IUL. You pay money into an IUL monthly or annually. But starting out, you can do a lump sum. So let's just say I have $20,000 in my savings account. I'm gonna put the $20,000 out of my savings account where it's only getting less than 1% interest. I pull it out of my savings account, I put it into an IUL. Now I have $20,000 sitting in my IUL, and every month, let's just say I want to put $200 in. The universal part of Index Universal Life, IUL, is that it's very flexible. You decide how much money you want to put in it. You could put in $100, $200, $500. You could put $10,000 a month into it if you have that kind of money, right? So this can be used in this case as a retirement account. You can use it as your high yield savings account. Ditch your savings account with the bank. You don't want to bank with the bank anymore. Be your own bank and pay yourself into the IUL as a high yield savings account if you are a mother or father and have children, or if you're a grandma or grandpa and you want to start a college fund for your children or your grandchildren. This is a great way to do it. You just throw money in here every month, just throw money in there, and by the time your grandson or son or granddaughter or whoever it is ready to graduate high school, you've accumulated so much cash in your IUL through compound interest and through getting on the average of 10% accruing interest on your money every single month. It's compounding, boom, 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 you're making a bunch of money. And you can use it as, I think I already said a retirement account. You can use it for like these three things. You can do it however you want to. And also, you have accessibility to this money. This money is liquid. You can use it whenever you want. So if you pull the money out, you borrow it at 2%. So you loan yourself money. You're not gonna pay the bank anymore to have them loan you money because you're just making the bank money. You're gonna loan yourself the money at 2%. So now, let's just say you have $20,000, or no, this $10,000 in here. You take out $5K. So the $5K that's still in here is still getting 10% interest. The other $5K you pulled out is now getting 8% interest because you're borrowing it at 2%. And the reason why you're still getting 8% interest is because it's uninterrupted compound interest. That means even though you're pulling the money out of there, you're still making interest on it like you never took it out. And that's because you're borrowing against your cash value accumulation. You're not actually taking the money out of there. And the reason why this is so powerful is because you can take the money out of your IUL and use this as a down payment for a real estate deal. Let's say, yes, you finally have enough money saved up in your IUL as for a down payment. You want to buy your first real estate investment property. Let's say a duplex, right? And let's just say for the sake of this video, the down payment for your real estate deal is $5,000. So you take the $5,000 out, you're still making 8% interest on it. I don't know why I wrote 7 on there. So let's just say this real estate deal, you're getting an ROI of 25%. Just because you put your money into your IUL, into life insurance before you bought this property, now you're getting this 25% plus the 8% interest that you're making over here with your IUL. So now you're making a net of 33% ROI on this real estate deal just by leveraging life insurance. It's a no-brainer. It's the best vehicle to put your money in my opinion. And I've made other videos. Check out my TikTok, Rush Financial Strategies. Same as this YouTube channel. Basically, guys, you want to leverage life insurance just like millionaires, billionaires, and the banks do. Because obviously the banks are making money. They're rich as hell. Why wouldn't you do the same thing that they're doing? And at the same time, you never pay taxes on this money. On the interest you make off of your accruing 10%, that interest you're making, you borrow it to put it into real estate, you take it out, you take all the money out to pay for your son's college or whatever, you don't pay any taxes on it. Not on the premium, and definitely not on the interest you're making on your money. It's a no-brainer, guys. If you want to open up an IUL, or if this video sparked any questions in your head, definitely click the link in the description to schedule a phone call with me. Ask me any questions you might have about the IUL, and I would definitely reach out to you. You're just gonna get put on a spreadsheet in list order. I already have a bunch of people reaching out to me through TikTok. So just give me a day or two to get back to you. And if you actually want to open up an IUL, I make this analogy all the time. When you go to buy a house, you have to have a real estate agent help you with the process of buying a house. Same thing with an IUL. I'm a licensed life insurance agent. That's why you go through me, click the link in my bio to talk to me on the phone. We'll get an IUL open up for you. It's super easy. We'll talk about it more on the phone. And yeah, make sure to subscribe for more valuable content like this. I'm trying to educate everybody, and let's become financially free together.